welcome you all to the fourth quarter FY19 results conference call of IFB Industries Limited. The management is represented by Mr. Prabir Chatterjee, Director and CFO, Mr. Rajshankar Ray, CEO, Home Appliance Division, and Mr. Arup Das, Head Marketing, Engineering Division. I now hand over the call to the management for opening remarks, post which we can take questions. Over to you, sir.
Thank you, Chirag. Good afternoon, everyone. On behalf of IFB, I welcome you all to the post-result con call of IFB Industries Limited, FY19. Joining with me today on the con call are Mr. Rajshankar Ray, CEO, HLE Division, and Mr. Arup Das, Head of Marketing, Engineering Division. Now I will share with you our performance for the fourth quarter ending March 2019 and year ending 2018-19. During the fourth quarter, company reported a total income of rupees 626.25 crore, a growth of 18% over the corresponding period last year. EBITDA margin stood at 3.4% for the fourth quarter compared to 8.5% during the same quarter in the previous year. The dip in EBITDA is mainly because of exchange fluctuation, increase in commodity price, and increase in import duty on AC and MWO, microwave, which is a traded product. Against which we could not recover the price increase, the effect of increase that has happened. For the year ended March 2019, company reports a total income of 2552.28 crore, a growth of 15.6% over the same period last year. EBITDA margin stood at 5.4% during 2018-19 as against 7.9% during the corresponding period of the previous year. As explained, the reasons are same: exchange fluctuations, pricing, the import duty, this thing, and the commodity price increase. But if you notice, major impact came on the fourth quarter because of the sale which happens during the fourth and first quarter of any year. With that, I will request you, Chirag, to start question and answer.
Sure, sir. Yeah.
Yes, sure. Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pritesh Chadha from Lucky Investment Managers. Please go ahead.
Thank you for the opportunity, sir. Sir, just couldn't understand, the fact that the microwave and AC business for us is a fairly smaller component in the total white goods sale. Still, it could impact the margin so much, or there was, some other reasons also for the margins in the consumer durable, despite the fact that we have actually taken some price hike in the washing machines.
See, I'll tell you, actually, overall, if you see for during the year, our AC sales value was around 300 crores, and microwave around 282 crores. Okay. So, amount is fairly large. This is one thing, but as I explained, there are 3 components to it. First is the forex, second is the import duty high, and third is the commodity price high. For example, I'll go one by one. The exchange fluctuation, if you see the last year base, which went into the material cost, INR dollar relation was around 65 rupees per dollar, whereas 18-19 it is around 70 plus. So around 5 rupees per dollar effect minimum. Then the duty of microwave and AC went up by 10%, and the commodity price. Out of that, suppose the effect of forex alone for the whole year was around 50 crores. Out of that, commodity price and forex, out of that around 25 to 30 crores we could realize through increase this price. In case of the increase in import duty, like I stated last time, we have taken a number of steps. For example, in microwave, we negotiated with vendor to bring down the import price, number one. Second, we increased price to some extent, but it had also effect on us because sales went down temporarily, although we could recover the position. Third is, that interchanging the mix. We pushed more of higher-end models. As a result, we could recover the amount. But in case of AC, we never had much of a chance because we can't increase the price increase much there. But on AC, what we have decided now, we have already started setting up a plant in Goa. We have already acquired the land. The design and this thing is finalized. Manufacturing facilities like plant installation and other things are in progress. We are expecting by next year, first quarter, we will be in a position to start producing AC. These are the major effects. Like I said, if you see this quarter alone, effect is around 25-30 crores. Because what happened in the fourth quarter and the first quarter, sale of trading items are more compared to the manufacturing items. And when we sell more of AC and others, it definitely impacted. Even in the first quarter, up to April, situation would be more or less same. From May, it will change. The reason being we have increased, done some price increase also, but the effect of full effect will come from the end of May. So by May, June, we are expecting to things normalize, but the effect of AC will remain with us till we start producing. Is that clear?
Yeah. So is it fair to conclude that bulk of the impact is because of microwave and AC?
Microwave and AC.
And you had taken some price hike in loaders, and there was a in-house or import substitution in.
Those things are done for the front loading and this thing. But what happened? Although we don't call it seasonal now the way we used to call it earlier, but normally you will see June onwards washing machine and other sales happen. But in the last quarter of the year and the first quarter, AC sales are more. Am I right, Ari sir? Rakshankar. Hello.
Hello.
Mr. Ray is there on the line.
Yes, I'm there. Hello, I'm there.
You can add to my point, what I'm saying.
Hello.
You can add to what I say.
No, I think, Mr. Chatterjee, you covered the point. So, to the specific question on is the impact coming out of microwaves and air conditioners? Yes. Almost the entire impact is coming out of the issues that we had on profitability on microwaves and air conditioners.
Lastly, I want to know what is the top loader and front loader sales for FY19 volume numbers?
Quantity I will tell you separately. If you can call me later on, please.
Okay. If you could just tell the growth, if it is possible. What was the volume growth?
Same thing, but I don't have that paper. I will tell you. You call me separately, I'll tell you.
Thank you very much, sir, and all the best.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Aditya Bajatia from Investec. Please go ahead.
Hi, good afternoon, sir. So my first question is on top-load washing machines. We were thinking of launching 6 kg top-load washing machines. What is the status of that? And also in the past few conference calls, you had indicated that we would be looking to introduce refrigerators as well. If you could let us know about that as well.
Yes, so Rakshankar here. On the first point, the development of the 6.2 kg top loader is continuing, and we expect to release it in the Q2. Internally, before the release of the top loader, there are some targets that we have made in terms of extraction from existing network for the range that we already have. So that is an internal commitment made by our sales team. We are working on that. As soon as we reach those commitments, we expect that around Q2, we will release the 6.2 kg. because we want to be absolutely sure that we get pure incremental sales from that category.
And how big could that category be? What could be the revenue contribution going forward?
If you see the around 55 to 60% of the industry is in the 6 and 6.2 kg category. That is of fully automatic top loaders. So we are currently, with our existing range, represented in about, you could say half of the industry. So when the 6.2 kg is ready and in the market, it will address the remaining half of the market. So the revenue potential is quite large. As far as the question on the refrigerator is concerned, we had shared in the previous investor call that as of now we are just doing the product development, and our internal thing is to fix the margin issues that we have before we get into refrigerators.
Okay. My second question is on the potential impact of customs duty. Now, I think room ACs and washing and microwave ovens put together would be contributing around 140 odd crore rupees of revenues for the quarter. Given that customs duty was increased by 10%, even if we take a case that that we could not pass on even a part of that customs duty impact to end customer, there should have been, let's say, around 14 odd crore rupees of impact. Even adjusting for that, margins appear to be at the lower level. So is there something more to that?
Can I explain? But the other part is, like I said, that there is an impact on account of the import, because AC and microwave is totally import. Now the forex effect also you have to take into consideration, because we said that in the manufacturing imports, because on the manufacturing products we have reduced substantially. Whereas in case of the traded products, for example, microwave and AC, which is totally imported, major the price, the effect on the adverse effect was on the AC and microwave, which we could not reduce. We could not realize by increasing the price.
Understood, sir. And so your main competitors on the microwave oven side, are they all manufacturing within India? And is there an outsourcing model also available for microwave ovens as it is available for room ACs?
So, Rakshankar here, the main competition for IFB and microwaves is LG and Samsung. And Samsung is currently importing, and LG has a degree of manufacturing and also some import, so it's a combination. When the customs duty went up, both of the companies actually held the price. Samsung specifically held price and to some extent even reduced price. This was when the customs duty went up, so that was a couple of quarters back. And we were not in a position to pass on the impact of the customs duty. Now, what we have done is over the last 2 quarters, we have taken selective price increases. We have rejigged the model positions in terms of bought-in new models with more features at higher price points, allowing us to negate the impact of the customs duty. And the last price increase that we took was between February and March. So the full impact of that will come by the end of June, because there's a 3-month timeline in terms of the full impact. Okay. As far as to a large extent, as far as the microwaves are concerned, we will be able to negate the impact that we had in the last quarter and in the last year. As far as air conditioners are concerned, like Mr. Chatterjee said, there are 3 elements here. One is the element of the customs duty. The second is the element of the forex. And the third is an element of an actual price increase on the product exit China because of the internal capacity related issues within China. So the combined effect of all the 3 together and the market situation where nobody increased price and when we were not in a position to pass it through, the air conditioner has been a bigger challenge than the microwave. And we have taken some selective price increases on air conditioners as well, which we have passed through from last month onwards. Effect of that will come in May and fully in June, like Mr. Chatterjee said. But it will still not be a full fix. So we will have to, we will have a status quo on this till we start manufacturing. And the impact of that, we will have to work on the existing products to recover. That is the current plan that we have.
Understood, sir. And so my last question is more from my understanding perspective. Is it fair to assume that whenever costs go up sharply, whether it's on account of commodity or on account of forex, given how competitive the space has become, it will take 2 to 3 quarters for companies to be able to properly increase their pricing and to be able to pass on those costs to end customer?
So if you see, for IFB, we have two different sets of experiences. On the manufactured areas, we are able to pass through any changes within a quarter. So the policy that we have is we review quarterly in terms of what is the commodity forex situation, and we make the adjustments. And given the fact that we have a lot of local production and we are able to basically manage forex-related issues much better, we have no problems at all on manufacturing. As far as the import category is concerned, we have never had problems with microwaves as well, because whatever was the impact by value of, by virtue of product-related actions or market pricing, we were able to knock off any impact.
Sure.
This last year was very unusual because a 10% increase is a very huge increase. And it's very difficult to knock it off in one go. The third set of experience is on air conditioners, where by virtue of our present position and having to rely on imports, we are not able to pass through price increases the way we want or the way we do with manufactured products. This problem will get resolved when we bring manufacturing into India, which will be in the fourth quarter of this financial year.
Sure. Understood. Thanks a lot, sir.
Thank you. A reminder to participants, to ask questions, please press star and 1 on your touchtone telephone. The next question is from the line of Pawan Kumar from Ratnajaya Capital. Please go ahead.
Sir, of the washing machines, how much of our components are in-house manufactured and imported? If you could give a breakup even from top load and front load separately, that would be helpful.
So in front loads, our imports now are at about 15 to 17%, and this has consistently reduced over the last couple of years because of the localization in electronics, etc., that we have done. And it will remain at more or less this level now. As far as top loaders are concerned, this value is at about 35%. And we have initiated a project to bring it down to sub 20% levels. This will happen by, let's say, third or fourth quarter of the next year.
Okay. And when we are talking about ACs and microwaves, it is fully imported mostly?
Yes, my microwave is a CBA import, yes.
And on ACs, we would be importing basically the compressor, is it?
In air conditioners, what we will be doing is that plastics, sheet metals, assembly-related costs, electronics, everything will be within India day number one.
Okay.
The compressor and some raw material elements will be imported. As far as the compressor is concerned, over the next 15 to 18 months, there are compressor manufacturing facilities also coming up within India, for which we have already begun projects of sourcing from the Indian units with developments already started. So, let's say between Jan 20 to December 20, the compressor would be imported. But starting, let's say, Jan 21 onwards, I would expect that maybe 75-80% of the sourcing will be from within India.
So, would it be fair to assume that right now we do around maybe 40 to 50% of sourcing from imports on ACs?
AC is completely imported as on date.
Completely as on date?
Completely imported. Completely
So
imported. And that is
we
one
just
of the...
assemble the...
No, it's a CBU import as on date.
Okay.
Which is one of the reasons why, we've had such a large impact related to the customs duty and forex area. But when we localize from the fourth quarter of this year, it will be completely localized.
Okay. And this 150 crore project, sir, what is the kind of timelines we are looking to break even on this investment?
We are expecting to begin production in January 20 from the entire manufacturing setup.
Okay. And any internal targets on when we can scale up to full capacity? Maybe 3 years, 4 years?
No, by full capacity scale up, you mean enough to fulfill our sales requirements for the domestic sales? Is that what you're talking?
No. From what I understand, this 150 crores of whatever investment you are putting into your capacity can give you revenues of up to 1,600-1,700 crores. And I'm talking about if you wanted to go to that particular kind of scale, how many years would it take? At least, what do you think? What is your perspective on it? Want to sell it to somebody else?
Understood. So, as we have mentioned in the investor report as well, the execution strategy that we are taking for the air conditioner project is on two levels. One is as far as the IFB brand-related sales are concerned, in terms of IFB being able to address the required channels, which would be, let's say, online, offline, distribution, etc., creating a range that gives us a clear, unique differentiation and the volumes that we want in the domestic market. That is the first strategy. And the second is that the factory can also be an OEM for buyers who also want to, localize production into India.
Okay.
And the third is exports into geographies like the Middle East. So we are working on all three, and specifically on the OEM supplies, there is already contacts that we have made, and the discussions as of now are positive.
Okay, that is...
So as far as the project payback is concerned, and full capacity realization, that is a specific question that you asked, we believe that within, as a result of our own sales plus OEM sales, we should be reaching full capacity in maybe 3 odd years.
Okay. OEM sales plus own sales, OEM sales, 3 years. That is what you are putting it as.
Yes, I would expect that.
Okay. And on the capex front, do we have anything, any particular visibility, sir, on FY20? How much are we going to invest? FY2021? Anything, any kind of visibility you can give on that? Apart from this particular 125 crores capex?
Mr. Chatterjee?
Apart from that, we have around engineering around 50 crores. The engineering would be around 70 crores, and in EKD another 25-30 crores.
Okay. Home appliances another 25-30 crores.
Other than the AC.
Okay. So, would it be fair to assume that there would be around 230 crores of capex that needs to be factored in over a period of 2021? FY20 and FY21?
Yes.
Okay. Okay, thanks. I'll get back to you.
Thank you. The next question is from the line of Mitul Mehta from Lucky Investment Managers. Please go ahead.
Yeah, Mr. Rajshekar, my question is to you. Can you hear me, sir?
Yes, I can hear you clearly.
Yeah. Mr. Rajshekar, one is, what we have seen, especially in the consumer appliance industry, obviously the whole focus has been more on the margins because, there is a bunch of imports and local manufacturing, sourcing, all this plays a very important role. What we've seen particularly in FY19 is that we've seen currency weakening significantly. We've seen raw material price increase and, forex hitting us very bad. So this was a very extraordinary year. Now, what my question to you is that, we are going to face some of these issues every now and then. So therefore, we've taken a lot of initiatives, but what we want to understand from you is, sir, some degree of predictability and sustainability as our business goes. We are doing extremely well as far as the growth of the company goes. We seem to be growing higher than the industry and much more faster than the peers. So can you please, take us through the definitive journey of IFB over 3 years as to what sort of material price reduction are we targeting from, let's say, FY19? Because FY19, I would understand that we've kind of almost hit the peak in terms of material cost. Now, we should see some hope of improvement and therefore translating into margin. So, Mr. Rajshekhar, if you can just give us a definitive plan for year 1, year 2, year 3 as to how and where we are going to be over 3 years in terms of the material cost reduction.
Okay. This is a good question, and I will try and answer this.
We've gone, if you see last 8-10 quarters of IFB history, we've gone through series of up and down, as far as predictability goes. What we want to understand from you is we want some definitive roadmap as to where we are headed now. Because, we also saw in Whirlpool now, Whirlpool seems to have, hit that particular area where the predictability has become far more better. As far as IFB goes, we are still kind of, struggling. So, can you please help us to understand as to where we are going to be next year?
Okay, so this is a very good question. I will try and answer this. And if I miss out some parts, you can ask me again.
And sir, one more thing. I'm sorry if I was a little harsher. Because, Mr. Rajshekhar, you've gone on records and said on the conference call that our ultimate objective is to get to a 10 double-digit EBITDA, which I believe is not at all difficult to, get to that number, considering the fact that the other companies are delivering. So, my question to you is, what is that we are lacking, where we are struggling, or are we kind of not yet, still the systems are not in place, our sourcing is still very weak. So, please help us to understand your business model itself.
Done. Okay, so I will try and answer this in parts, and like I was just saying a couple of minutes earlier, if I miss out something, you can ask me again. Okay. So, if I look at this year, that is FY19-20 and 2021, the point that you have made about being unpredictable as far as the margin is concerned and going up and going down is completely taken. The point about us having gone on record in the conference calls talking about our desire to be a 10% plus EBITDA, in terms of internal target, that is also correct. And we have not delivered on that. So, to your specific question of what we are planning in terms of the material costs, etc., over a 2-year horizon, I will detail what exactly is the internal execution plan that we have. If you look at the material cost over, let's say, the last 12 months, or even if you look at the fourth quarter, where the margins are very low, we have two separate issues that we have to deal with. As far as the manufacturing is concerned, in terms of a currency impact or managing commodity pricing, we have actually no issues at all. So our gross contributions on manufacturing have slightly grown, in fact, in the last year as compared to the years before that. Because we have, over the last few years, internalized a lot of value addition. We have completely localized electronics. So the impact of a currency swing on manufacturing for us today is limited. In terms of what will happen to the manufacturing material cost over the next year specifically, or a 2-year frame, I don't see any major swings in the commodity pricing. I would expect them to remain sort of fluctuating in the ranges that they have been over the last 2 years. So whatever material cost structure we have now will remain stable. There is a redesign and further localization of electronics that we are planning. So I would expect that over the next 1 to 2 years, we would reduce material costs by about 2 to 3% as a result of the work that is going on. This is as far as the manufacturing side is concerned. As far as the import side is concerned, the gross margins have significantly dipped post the customs duty impact. So the material costs are very high, and there will be significant reduction in the material costs for air conditioners because of the manufacturing project that will come on stream in January 20. So for a specific plan in terms of what will happen in the next 2 years, our agenda now is that whatever profitability we had on microwave, so we restored it back to the extent possible, which will primarily come by redoing the model mix. And on air conditioners, to get a healthy gross margin contribution, we need to have the manufacturing project go live. That is January 20. If you look at this essential unpredictability on the margin side that we are currently having, this unpredictability will go if the revenue rises that we get are balanced out in terms of, irrespective of which product category rises, the margin rise remains the same. Now today what happens is that if the air conditioner sales rises significantly, which it should, because we are very small currently, it is not commensurate with the margin rise because the gross contributions on air conditioners currently are very low. Once we have fixed the air conditioning segment through the manufacturing project, irrespective of whether washing machines rise or air conditioners rise, our margin will rise in a predictable manner. This is what we are targeting. This was on the material cost side, where two elements: one, the electronic redesign and additional localization that we are planning, leading to about 2 to 3% reduction. The second is the import side material cost, led primarily by the air conditioner manufacturing. These are the two main elements on the material cost side. The other side that we are working on as a company, which we have also shared in previous investor calls, is that the network addition that we have made over the last 2 years has been very high in terms of the reach to the new distribution network. We have not been able to realize the sales value from that the way we should. So even though the point that you made about IFB growing faster than the industry and faster than peers, the actual reality that we see internally is that there is a much more growth potential to be realized if we do the network side properly. That is an area that we've been spending a lot of effort on over the last 1 year. We are still to get the results, but the big action that we have to deliver, which is specific to this fiscal year, is that we are able to realize from the network the sales that we should get for all categories, not just air conditioners, but also additional revenue growth from categories like washers. So the ultimate objective of the double-digit EBITDA that we have shared, for us to deliver, I would put 3 key action points in terms of our internal goals for the next 1 year or 2 years. The material cost on manufacturing by about 2 to 3% on an annual basis. Material cost on imports, primarily the air conditioning project, and the sales realization for all the categories from the network that we have in place.
So, sir, if I may, just add to what you described, the situation and the actions that we will take. When you say network addition, which means the cost have, grown much more than the increase in sales, be it air condition, be it microwave, or be it washing machine. So which are the costs which has grown very rapidly for you in your P&L debit? If you can just, if you can just give us a very broad sense also, that would be fine. So one is obviously...
This is a correct point. So when I talk about the need to get more extraction from the network, over the last year or year and a half, the additional investments that we made were in two areas. One was in terms of the people that you meet at the counter when you walk in as a customer, which we call as the counter sales representatives. So we have made investments in terms of numbers, remuneration, etc. for those people, so that we are covered by sales representatives in as many counters as possible. So that investment is there for the company, but we should get much more return from that. That's the first point. The second, because we expanded the network significantly. I mean, we went from about 4,000 to 5,000 counters to now about 10,000 counters. We increased the sales executive presence in terms of coverage of territory. So the investments made in the sales team, the investments made in terms of people that you meet as customers at counters who explain the IFB products to you, and investments that we have made in product development in the R&D area, in terms of the product pipelines, deliveries, etc. So these are the three big areas where there have been significant investments by the company.
Right. So, sir, over last maybe 1.5 years, these three heads which, where the investments have been very high. Now, going forward, do you feel that the intensity will fall as far as the OPEX for all the three elements go? And also, if you can just quantify us approximately as to how much of, OPEX-related cost we would have expensed on account of these three line items.
So this last part I will let Mr. Chatterjee handle. Before that, what the point is that this OPEX in the form of the investments in representatives in the sales force or people in R&D for the product development work, this will not rise now the way it has risen earlier, because that investment is made. For us now, we need to get the return from the market in terms of the sales. So this will have a incremental increase in a normal manner. It is not going to increase the way it has increased earlier. That is the first point. The second point, in terms of what has been the impact of the increase, Mr. Chatterjee, you could answer that, please.
See, I'll tell you, there are the increase mainly in CSR, because when we want to increase the number of counters and the dealer reach, we have to increase the number of CSR installs. That is one, which will give us results definitely. As a result, you can see that 18%, 20% CAGR in terms of revenue we are getting. Number two is the IFB point. We have FOCO, franchisee-owned, franchisee-operated, as well as company-owned, company-operated. There, the rent is increasing because these are ours. Because first, the margin that you generate from those stores self-liquidating. So you are not having any issue there. But these stores, from these stores, you can generate much more sales. Now we are trying. Instead of concentrating more or increasing many more number of stores, we are trying to manage them well so that we get the desired revenue per store and our margin increases.
And Mr. Rajshekar, if you allow me to ask you one more question.
Yes, please.
Yeah. So, Mr. Rajshekar, now, if I were just to look at your numbers a little more granularly, if you look at the employee cost, now obviously you gave us the obvious reasons of why we saw such a steep increase in the, in the people cost. From last year, let's say we were at about 52, 53 crores. Same quarter, we are now at about 65 crores, which is like 30-35% increase. Okay. Can you hear me, sir?
Yes, I can hear you clearly. Yes.
Yeah. So that is like a good 30-35% increase. Now going forward, is it fair to assume that the increase in employee cost will not be to this extent?
Can I explain?
Yes, Mr. Chatterjee, please.
See, if you see the YTD increase compared to last year in employee expenses is around 21%. Okay. And you see the number of people, the one that we had last year it has gone up by around from, just a minute, I'll tell you the exact number. Just 1 minute. Because there are 10-12% increase, the number has gone up from 1690 last year to 1970. Okay. This is, of course, I am talking about company as a whole, including engineering. 169 means it has gone up by around 16%. And overall, if you see the reported employee cost increase is around 21%. So there would be some increase on account of normal salary increment every year. Otherwise, you will not be able to retain, number one. Number two, additional people, whenever you are getting in the market, from the market, obviously they will come in at a higher cost, number two. Number three, if you see the quarterly result, from the last quarter to this quarter, there is hardly any difference. But if you compare with last year's same quarter, obviously the full effect of additional people, increase, everything will come. That is why it is looking so high. But YTD, if you see, it is 21% increase. Out of that, 16% is because of the manpower increase. Okay. Of course, there are manpower increase. There are some, attrition also. So overall increase is 21%. Out of that, around 12-13% would be the effect of average increment that we give to our employees.
But Mr. Chatterjee, going into FY20 and 21, are we going to see similar increase of 21% or it will be much lower?
There are something you have to take into consideration. For example, the increment part will be there. But second, since we are going into starting the AC manufacturing operations, there we need to few people. Am I right, Rakshankar?
Yes.
Because the technology is different, quality aspect is different. There we have to recruit some people. But those recruitment will give us result in terms of much more higher revenue.
Mridul, to the specific question, the increases on a apple-to-apple basis are not going to be to the levels that you are seeing now, because that investment is already done, and the revenue increases will be at a much higher rate as compared to this increase. First point, the increases as a result of the air conditioning project, etc., coming, will be net off by the savings on the material cost side. So,
right,
as a percentage to the sale, you will see a correction.
So, my last question, final question to you. So then, Mr. Rajshekar, now when do we hit the double digit? I mean, is it going to take 3 years, 4 years, 2 years? In your understanding, I mean, by now you would have a fair degree of sense by when we should get to a 10% EBITDA margin.
Yeah, so, we don't give a forward forecast, but if you look at the actions that we need to complete to specifically address this problem of unpredictable profitability, these actions are and the heads on which they have to happen, which is on the manufacturing material cost, the air conditioning material cost, and sales. I would expect that we will fix it as soon as the air conditioning project matures, for a full fix, the way we have been wanting it.
So let's say over 2 years, can we get to a 10% number?
See, our attempt is to do it as soon as possible, because you made a specific point that, look, you guys have committed this in an investor call, it's not delivered. So it is something that sits on our head as well, to be able to conclude and deliver this. I think what we can do is to get these actions completed as fast as possible, and if that happens, this is an automatic output from that.
I wish you all the best, and I hope you deliver on what you have said on the call.
Thank you. You are very specific with your points. Thank you.
Sir, it's been quite a tiring journey. So, I am hoping that you will, be extremely mindful about the delivery.
Yes, we will do that.
Thank you very much.
Thank you. The next question is from the line of Romil Jain from Systematics Group. Please go ahead.
Hello. Sir, thanks for the opportunity. Sir, just wanted to understand, when we are saying that we are increasing the network in the last 1-2 years, I think you mentioned that the counters have been increased, but can you specifically, give some numbers on what kind of marketing strength we have added, when we have increased the total employees, and what kind of IFB points we have added in the last maybe 1 year or so?
So, as far as the IFB point question is concerned, we are now at about 520 IFB points.
Okay.
And we would have added about 75 to 90 odd in the last 1 year.
75 to 90?
Yeah, 75
Okay.
to 90 approximately last year. And our aim is to reach a number of about 600 by the end of this year. The focus for this year will be not so much the numbers. Numbers is a natural incremental increase. Our focus is going to be on the profitability of the IFB points.
Okay.
Both for the company as well as for the franchisee. So that's the main agenda for this year.
Okay. Okay.
The team for the IFB points, etc., is already in place.
Okay.
As far as the sales people increase, the larger increase has been on what we call as the counter sales representatives on the sales side, which is the people that you meet when you actually go into a counter as a customer.
Right.
I think the last 1 year we would have increased about 450 odd people, which is people at so many more stores.
Okay.
As far as the sales team itself is concerned, the numbers increase would be maybe about 50-60 people, which is not very high.
Okay.
The larger increase is on the customer sales representatives.
Okay. Okay. And secondly, sir, in terms of competition, so in the entire home appliances division plus the AC division, so what kind of pricing pressure, if at all the competition is high, we are seeing over there, because a lot of competitors are there now.
So if you segment this by product category, then as far as washers is concerned, to my mind, the pricing pressure is similar as what was there before.
Okay.
So you have some import options through companies like Media, etc., which have been placed at a very lower price point. Some of our competition undercuts in an attempt to gain share. But I would largely say that it is similar to what was there before. There will always be pressures as far as pricing is concerned in a category like this. In a category like microwave, there was a degree of pressure post the custom duty price increase, but that has eased off, and we have shared this earlier as well. In a category like air conditioners, there is very severe pricing pressure basically. Since our share is very small as on date, we are affected more because input side costs we are unable to pass through.
Okay.
As the volume increases, I think our ability to pass through pricing will increase. If you see summary as an industry as a whole for the categories that IFB operates in, between now and let's say 12 months back, I would say that pricing pressure is similar. I mean, there is no new element of pricing pressure that has entered as of now.
Okay. And in washing machines also no major pricing pressure as compared to last year. And going ahead also.
Similar, there are players who are selling at a very low cost, but they were there now, they were there a year earlier as well. So it's not that there is any increased intensity of pressure. It's similar.
Okay. And last question on the AC side. So even when we start our own manufacturing, and the volumes kind of increase, do we still see that there can be a lot of competition even in spite of that, and hence we can sustain in a slightly premiumish category, or there can be some pricing war again, and we may get down the pricing to some extent? Your views on that?
Okay, so the pricing pressures in the air conditioning are the highest in all the categories.
Correct.
So I don't see any way how it can get worse because it is already very bad.
Okay.
For IFB, the difference is going to be from moving to imports to own manufacturing.
Okay.
So even with the pricing pressure remaining the same, our gross margins are going to get better because currently the impact of the custom duty, etc., is very high on the overall value chain for the company. Getting volumes is going to be a function of how well we do the sales side of the story. That is not so much related to the manufacturing coming up. How the manufacturing will help is that it will give a much better range. It will give features which are better than today. So it will help sales. But the larger part of the volume work has to come from the sales network related area, which I shared a little bit.
Okay. Okay, sir. All the best, sir. Thank you so much.
Thank you. The next question is from the line of Rahul Agarwal from Westbridge. Please go ahead.
Thank you so much. This question is from Mr. Raj Shankar. So one question which I had was, given that over the last 2-3 years, the growth has been driven a lot by e-commerce, has that been margin dilutive in any way for the company?
No, actually, the margin structure in online is similar to offline for us. And online commerce is not dilutive. It is actually a little bit helpful in fact.
Understand.
Because the gross margin structures are similar, but the overheads on e-commerce are actually almost nil in terms of sales force requirements, etc. So if you really look at it, it is similar or a little better. So it has not affected margins in any way.
I understand.
And we are quite sorry.
Sorry, the gross margins are similar and you are not seeing any pressure on them incrementally also?
No. In fact, we are quite positive about the whole e-commerce opportunity. And we think it can be very helpful to drive growth.
Understand. That's helpful. And so the other question is around the expansion of distribution network, which we have talked about several times in the past as well. And we have added a lot of these outlets. But given that our product is a lot more premium, for this sort of a premium front-load product, adding numeric distribution, does it really increase our weighted distribution in that big a way? Would it be easy to take out more sales from these channels, or do you think that these channels are more sort of building up the pipe for top load eventually, depending on how your 6 kg, 6.2 kg does there? Or do you think this is a high...
So it's a very interesting question you've asked, and that is one of the reasons why it is taking us more time. So the numeric reach which has happened are typically not counters which can sell a front loader very easily, or which can sell an IFB, the kind of top loaders that we have, which are more on the premium side. Many of the distribution networks don't sell microwaves. They've never sold a dishwasher. So to explain to the network, or for the network to learn how to place and sell a IFB product is taking us time in terms of the training. But if you talk about the opportunity, the fact that, availability drives sales, that, we have started displaying, and we've started, if you look at the percentage of the distribution channels contribution in our business, that has gone from practically nothing to a level of 11-12% in a 1-year time frame. The opportunity is very large. So you may get smaller extraction per counter, but the number of counters is huge. So the sum total impact of that can be very large for the company.
Understand. And so if you can touch upon how many counters are we covering now, and how many of them would have a front load machine of IFB placed, how many would have a top load placed, and how many would have a microwave placed, so that we have a sense of what are we leading with and where does our reach stand today?
Okay, so I will not answer it in terms of placement, because the real measure is that, how much regular business that we do with the counter. So I think that will give you an idea of the work that we have to do and also the opportunity. So currently we are at about 10,000 odd counters, which is directly and indirectly serviced. And if you look at front loaders, then we would be, doing business regularly on a monthly basis with about 2,500 odd accounts. If you look at top loaders, it is at about 2,100 odd accounts. If you see top loader, it has risen over the last 1 year from about 1,500 odd accounts to about 2,100 odd accounts. But both for front load and top load, the gap is from, let's say, 2,500 odd accounts to a potential of about 5,000 odd accounts. Even if I consider half of the network, billing regularly every month. If you look at air conditioners used to typically be only 800, 900 accounts. We only did regular business in a month. And that has risen to roughly about 1,800, 1,900 odd accounts in the last 2 months as well. So that is the sort of headroom in which we have to work. Have I been able to answer your question?
Yes. No, I think this is useful perspective. So these 10,000 counters you are saying do business once in a year, let's say, at a bare minimum, but 2,500 are doing business in any given month.
Yes, correct.
Got it. So these 10,000 would have some of the other products of IFB today in their shop, but only 2,500 would sort of buy regularly, which is
correct. So if you actually look at placement of a front loader, it would be maybe in 7,000 of those accounts, but month on month billing 2,500. Which is the job that we have, that the remaining accounts, if they learn to sell it and they sell it every month, then we also bill every month, and that is the headroom for growth that is available.
Understand. That's helpful. And sir, given that we covered a lot of margins, but we didn't spend too much time on growth in this con call, on the top load side, till about 2 years back, our growth was spectacular. We were literally out of capacity. And last 2 years, the growth has been in the 18-20% range, which is sort of much lower than our aspirations has been in that category. And we were thinking of the 6 kg, 6.2 kg launch in that segment. Has that happened? How has been the initial response to that? What do you think will be the growth rate in top load going forward?
So we have not launched the 6.2 kg as yet. What we had wanted was that with the range that we have, which is 6.5 kg and above, we wanted to meet some internal targets in terms of placement of the product. And consequent to that, the idea was that we introduce the 6.2 kg so that it gives us incremental sales on a pure basis. Now, if you look at the size of the opportunity, today the 6.2 kg segment is about 50-55% of total sales, so which is about half the industry. We are currently covering only half the industry. We expect that around Q2, with the work internally planned on the existing range completed, we would be in a position to release the 6.2 kg model. And that will allow us to address double the segment that we are addressing today.
Understand. So I think that will happen in the second half of the current year.
Yes, correct.
Understand. And so given that you mentioned that incrementally outlet addition and distribution expansion will also slow down, and your e-commerce base is also now becoming fairly high, what rate do you think can the washing machine category between front load and top load continue to grow at?
Actually, the opportunity is very large because in terms of growth potential, even without a growth in the active dealer base, our need to increase the number of dealers doing regular business with us is actually the largest lever for growth. So the dealers are already there, the placements are already there, but somebody is selling once in 2 months. Can that person have somebody properly trained to sell every month? So the largest growth opportunity is from there. As far as the online segment is concerned, as their reach increases, they will continue to grow rapidly. So I don't see any reason why the growth rates on a category like washers should slow down for IFB.
So you still think that the 17-19% growth that you have consistently done in washers can be done with your existing distribution?
Yes.
Understand. Okay. And your weighted distribution today for front load and top load will be at what percentage with these number of accounts that you have?
It will be 86 to 88% weighted distribution.
For both of them?
Yes.
Wow. Okay. And so one last question, if I may, on air conditioners. On air conditioners, a lot of these companies basically, Voltas and all of them have relied on outsourcing rather than own manufacturing. And that has also resulted in fairly good margins in that category, despite that category being far more competitive. So what's the rationale for us to do own manufacturing, and what will be our really consumer proposition in that category? Because at the top end, it seems Hitachi, Daikin have taken the place, and mid to top end, with General at the absolute top. At the bottom end, there is Lloyd, and in the middle, there is Voltas. Where will IFB fit in, and what will be our long-term consumer proposition there? And what do you think, how do you think will our own manufacturing aid to margins and overall business profile there?
Yeah, so, we had a lot of internal evaluation before we took the decision to invest into the air conditioning manufacturing. And the primary reason why we are doing it ourselves and not doing it through third-party sources was in terms of the quality and product proposition that we want to deliver. It was not possible through outsourcing within India. So if you look at companies like LG, Daikin, Hitachi, they are all, producing themselves. And we wanted a high degree of control on the quality and the value addition. So the aim of the project that we are doing is to deliver a product equal to the best brands that you have. Of course, there is a customer differentiation and value proposition that we need to deliver, and we are working on that. And I'm very hopeful that when you see the air conditioners in Q4, as a customer, you will feel that they're different and worth evaluating before you buy an air conditioner.
Understand. Now, positioning will be closer to Hitachi, Daikin, and not closer to LG, Voltas?
Yes, our positioning will be closer to the higher end.
Understand.
I would put LG, Daikin, and Hitachi into one bucket, and Voltas I would put into a separate bucket. So we'll be closer to the first bucket, or in the first bucket, basically, as a product.
Understand. Actually, I did not catch your earlier commentary on margins. You had mentioned that all the initiatives that you are doing should pan out by the start of the air conditioner unit, and that is when the margins should begin to show up. Can you elaborate a little bit, sir? So should we expect this next year, or you think it's 2 years away in terms of how do you think about when will the margin improvement start showing up?
So, what we said is that we don't want to put a timeline forecast on this, but there were 3 key things to be completed to get a level of predictability on the margin, which was the question earlier. One is on the material cost in manufacturing, which is a reduction of about 2 to 3% on an annual basis. The second is specifically the air conditioner project, because there is a large chunk of margin at gross level that we are losing there. So on the cost side, we said that with the air conditioner project live, both of these things get addressed. And in terms of revenue growth leading to greater contribution, that revenue growth is the point that we just discussed in terms of what the opportunity is and what is the job that we have to do. So all these 3 are the key things for us in terms of this year's execution.
Thank you. The next question is from the line of Harish Biyani from ICICI Prudential. Please go ahead.
Hello.
Yes.
Hi, sir. Good afternoon, sir. In terms of what's happening in the industry is very large capacity addition, and there are a lot of players with fairly deep pockets getting a lot of capital, whether it's a Voltas, Beko, Haier, etc. So do you think that in the next, say, 1.5, 2 years, you will see things getting much worse before it gets better in terms of pricing actions, competitor getting more aggressive on dealer distributors, etc.?
So to the 2 specific examples that you raised, Haier has always had manufacturing here. It is investing to strengthen the manufacturing. And in terms of the price points, etc., it has occupied in the market. I don't think those will change. They will probably strengthen themselves by investing in India in terms of what they can offer to customers. Higher per se in the categories in which IFB operates is not a direct competitor, so I do not think that we will be impacted so much. They will probably have a greater impact on categories like refrigerators. In air conditioners, in any case, we are small, so for us there's headroom to grow. As far as Voltas Beko is concerned and their investments into manufacturing, I think that project is still some time away. So we will have to wait and see. I don't expect any additional pricing pressures as far as the market is concerned as a result of that investment. So these are the two specific answers. Would you like me to elaborate on any other point on this?
Yeah. So essentially what you had seen in specifically the categories where you were there, say about 2 years back or say 4 years back, is there were few players and every player had certain niche. You had a certain niche and you were operating in that particular niche and you were growing. Suddenly, looking at the long-term growth in this particular market, a lot of new players have come in, whether it's say a Voltas, Haier or a Bosch, Siemens have come. Bosch is trying to create another niche in this particular category. So from a 4 to 5 player category, this particular category itself is becoming a 10 players category, and this is happening over a very short time frame. So one particular hypothesis is that the dealer distributors, etc., especially on the retailer side, remains only so much. So people who are investing more money at this point in time, looking at the next 5 to 10 years, especially the newer players, will have to kind of get more aggressive, at least for the next couple of years, to gain market share. So that's the hypothesis which I am trying to test.
Okay. So if we look at the washer category, I'll answer it specifically
Sure.
in this category. If you look at the last, let's say, 2 years time frame and see what has been happening. So the fact that the Bosch has been trying to buy shares by being aggressive on discounts and pricing, or that the Samsung has been extremely aggressive in trying to buy shares by giving mobile phones combined with the washing machine, etc. That has already been there. So for IFB per se, it's not going to be something new because they've been doing that for quite some time, and our growth has come in spite of that. So I don't see any problem specific to this area. The other thing, if you look at the last 1 year horizon, has been, for example, media on the online space put in washing machines at about half the normal price, which they did in the season period and also before and after the season period. We have not seen any impact as yet. They sold volumes. We are aware of the volumes, but it has not impacted us.
Okay.
I would expect that they will continue to do the same thing in the next year or 2 years, or like you're saying, the next 5-year horizon. There is a segment of customers who are price sensitive and who will go and buy those products. Some of those customers also buy IFB, but can we sustain growth rates by doing what we have to do with our own network, increasing placements, ensuring that our extraction is better? I think we can more than make up for those numbers that we would lose to let us do these kind of entrants. To an entrant like a Voltas, which will place washers into its network, etc., I personally don't see any impact for IFB. We have to experience it, and if there is any cannibalization happening, then we will have to think of suitable strategies for that. Right now, specific to this fiscal year or the next fiscal year, I think the potential for growth that we have from the agenda that we have with our own network is far outweighs any potential issues that may come out of any of these new activities. So, am I being able to explain this?
Yeah. This is very helpful. Thank you so much. Sir, my last question is on the capex that you would be doing for the air conditioning business. What would that be? Capital outlay?
Mr. Chatterjee, would you like to answer this?
around 150 crores
150 crore.
to start with.
This is for fiscal 20.
Yeah, 20, mainly in 20, there could be some spillover in 21.
And essentially, what all parts are you going to manufacture in-house, and how much is this of this, if you can share, would be outlay on land, and what would be the rest of the things that you do in-house?
So, we would be doing complete assembly, heat exchangers, the basic coil making in-house. Assembly testing would be completely in-house.
Okay.
Plastics and sheet metal related parts would be supplied by suppliers out of Goa.
Okay.
Electronics will be manufactured in Goa through a supplier.
Okay.
And the imports will be the compressors to start off with initially. So our value addition internally will be quite high in the beginning. It will be equivalent to whatever the best brand has.
Okay. Okay. I have further question. Maybe I'll take it off. Thanks so much. Okay. Thanks. Bye.
Thank you. Next question is from the line of Mitul Mehta from Lucky Investment Managers. Please go ahead.
Yeah, Mr. Rajshekhar, just wanted to know how much do we spend typically in a year in R&D for product development?
How much do we spend? We spend around 36 crores this year.
36 crores. Okay.
36 crores is the revenue, another 13 crores is on capex.
What was that in the previous year?
Previous year was around, I think, total was around 36 crores.
Okay. Okay, thank you.
Thank you. Next question is from the line of Ashish Kacholia from Lucky Investments. Please go ahead.
Just wanted to understand the quantum of subvention that we give to financial players like Bajaj Finance, etc. in a year, and how has this number trended in FY19 versus FY18?
See, now in Bajaj Finance, for example, this year average billing, the normal period is around 46-47 crores compared to 41-42 crores last year, and which is around 24 to 25% of the total sale. But during the festival season, it goes up to 30 to 35%.
Okay, and so it's moving more or less in line with the sales. Am I correct?
Yes.
Okay. Are we seeing any trend further in the coming financial year that, my question is basically, have we had to do more of subvention to continue our 17-18% kind of growth?
No, we don't do anything actually. It is more on the market and the customers, because nowadays suppose all big stores have those agents sitting there. And depending upon what customers, how they approach it goes, we have no control on that. Only what we do, the counters where we'll keep what material for Bajaj Finance and other things, that we try to control a bit.
Okay, my question was basically to do with the fact that a lot of times you get a zero interest product from the finance company. So I thought that the funding of that would be done by the manufacturer, that is us.
No, that is what I'm saying. Like for example, billing, it is always there. There is a manufacturer's buy down, there is a dealer's buy down, and there is a processing fee. Okay. So share between, for example, manufacturers and the dealers and the processing fee, depending upon the season, from time to time, we keep on changing, depending upon the market and customers' acceptability. And it varies store-wise and geography-wise.
Okay. Thank you very much.
Thank you. The next question is from the line of Kalpesh Moti from Valentis Advisors. Please go ahead.
Yeah, good afternoon, sir. So all the questions have been answered, but one question. So what's your budgeted ad spend?
Can you repeat, please?
Budgeted ad spend?
Yeah.
Budgeted ad spend is around, we spend around 1.5 to 1.6% of the net sales.
Okay. Okay, thank you, sir.
Thank you. the last question from the line of Pawan Kumar from Ratnaraya Capital. Please go ahead.
Sir, from my understanding, there is a significant portion of semi-automatic machines also in the market, which maybe... So what is your view on them getting converted into fully automatic? Because I guess they are also maybe around 30 or 30% of the market right now.
See, this hypothesis has been there for quite some time, that there is a huge chunk of semi-automatic machines and they will graduate to fully automatic machines. But if you look at the last 3-4 years, people who have semi-automatic machines also go back and again buy semi-automatic machines. They buy maybe bigger and better semi-automatic machines. So even though, the hypothesis has been there that the fully automatic segments will significantly accelerate because people will move up, it has not happened on a very large scale, at least till now. So the fully automatic is growing definitely much faster than the semi-automatic. But is the semi-automatic segment disappearing? The answer is no, not right now.
But definitely the price point between a semi-automatic and automatic seems to be gradually coming down, right? In the sense, semi-automatic versus a top load automatic, the price differential seems to have come down a lot.
Yeah. So if you take the if you take the high end of a semi-automatic machine at 11,000 or 12,000, and the lowest end of the fully automatic top loader at 14,000, then yes, the difference is very low. But the specifications would also be different. At 11,000, you would have a very large semi-automatic machine. The top load fully automatic would be very basic. So there is still a price difference, even though it may be a little lesser than before, but there is still a price difference.
Okay. And on the AC capacity side, sir, since we are adding certainly AC capacity for our own manufacturing, would you have any data of who are the other players who are actually adding such kind of capacity of indigenization going forward in India? And what might be, sir?
So the news and what you hear has it that the third party manufacturers like a Number or a New Vision, they are adding to their capacity. A frontline player like Daikin is also upgrading capacity. You have new projects which have been announced, which is Blue Star, Voltas. They have said that they're putting up capacity. So there are lots of projects. I would assume that all of them would fructify between now and the next 2 years.
Okay, but any idea of quantum of capacity getting added?
In terms of numbers?
Yes.
No, I would not be able to give you a figure on that.
For the investment?
No, I would not be able to give you that because, these figures are not shared by companies in the public domain. We share them, but not everybody shares them, so it's difficult to put it together.
But overall, if I had to question you, say, what might be the level of indigenization of in ACs today versus what might it be maybe 2 or 3 years later in terms of industry, what would the answer be?
I may not be able to give you a very specific answer on this, but if you look at what's happening in the industry today, is that a lot of the players are importing what is called as the indoor unit from China, and the outdoor unit is being made in India. Now, the indoor unit is probably 40% by value of the total AC. In 2 years' time, I think that will significantly drop because of the impact of this customs duty. So you will see maybe the entire production of indoor units, maturing in India itself. This is the first change. The second is that the raw material inputs like compressors today, which would be, let's say, 40% of the material cost.
Okay.
or let's say 30%. Today, 100% is imported into India. And in 2 years' time frame, two large players are setting up capacity, expanding capacity. So I would expect maybe 80-85% of the requirement to be serviced from within India only. So, that entire thing will localize. Other than that, areas of raw material like copper, aluminium, zinc, etc., that remains imported. And I think that in a 2-year time frame will also remain imported because the suppliers of them are at a very large scale and India as an industry is still not that big. So you will see a substantial localization on this category driven by the government import duties. And of course, forex related areas.
Okay.
Have I been able to answer your question, please?
Yes, sir. Yes, sir.
Okay.
And lastly, on the sales network strategy side, so what is the mix going to be on account of maybe a third-party retailer versus an IFB touchpoint sales going forward? At least in terms of strategy, what we want it to be?
So IFB points today are at about 15% of company sales. And over a 2-year horizon, we would like it to rise to roughly about 20% of company sales. So as far as the IFB store sales over a 2-year horizon, so I would expect a range of 15 to 20% for own store sales.
Okay. And you said from the touch points point of view, we are at around 570 now, and we are adding how many, sir, this year?
No, we are
at 520 now.
508. And we'll reach around 600 by end December next year or March.
By December 2019.
2019.
We will be at 600.
Yeah, and what we said is that the main focus for this year is the profitability of these stores. The numbers going from 508 end of fiscal year to 520 now to 600 by December, this will naturally happen.
Okay, but from my understanding, this new touch points would be added mostly on Tier 2 and Tier 3?
Yes, mostly Tier 2 and Tier 3, yes.
And how many of these can be our own IFB franchises, IFB, touch points, and how many would be third-party retailers? Any idea?
I think most of it will be franchisee-owned stores.
Franchisee-owned stores?
Yeah, most of it will be franchisee-owned.
And any idea can you give us on what would be the proportion of the profitable stores in the network right now?
So if you look at it, I will answer profitability from the franchisee's point of view. Okay. Today, there are about 30% of stores where the franchisee is not making money. So that's the problem that we have to fix. The remaining, let's say, 70-odd% of franchisees, out of that, there would be another 30-35% who are making money, but the money is still low. And 30-35%, one-third of them making decent money.
Okay. And any particular strategy on turning these stores around, or we are, after 1 or 2 years we let them go?
So no. We don't want anyone to go. And in fact, over the last 2 years, our attrition of stores has significantly reduced. The primary strategy is to get them more footfall, and that is marketing-led at local level and digital-led. So what our conversion rates are very high. They range from 40% to 50%, which in the retail industry is extremely high. So when a customer enters an IFB point, there is a very high conversion rate on the customer actually buying something. What we need to do is to send more footfalls into stores, for which our effort is through local level marketing, catchment area marketing, and that's the work that we do.
And generally, payback would be for 1 to 2 years, 2 to 3 years, or how does it work?
For the franchisee?
Yes.
Yes, the franchisee payback is between 2 to 3 years.
Okay. Thanks, sir. That was all.
Thank you very much. That was the last question. I would now like to hand the conference back to Mr. Chirag Mishala for closing comments.
Yes, sir. Actually, I have two quick questions. The first is it possible to quantify the price hikes that we have taken in past, let's say, 6 months or so? And secondly, on the Ramson's acquisition, now that it has been integrated, so what kind of sales potential and margin are we expecting in next year, FY20?
So as far as the Ramson's acquisition is concerned, our budget for, the internal target for the sales is roughly about 80-85 crores. And the margin that it will give is roughly about 20-odd%.
Okay. That was actually budgeted is around 14.5 crores, around 17+%.
Okay.
And what was the first question? That
sir, on the price hikes, you had mentioned that
on the price hikes, the increases have been to the extent of 2 to 4%.
Okay. This was done even in the front load washing machine, sir?
Yes, we have also increased prices on front load.
Okay, so basically all 4 or 5 key product categories, 2 to 4%.
Yes, so the microwaves we already shared, ACs we have done, and even on front loads and top loads we took price increases.
Okay. Okay, sir. So, so thanks. I would like to thank the management for giving us the opportunity to host this call and to all the participants for your presence. Sir, would you like to make any closing comments?
Thank you, Chirag. Thank you, everybody.